Sunil Bohra, the Group CFO and CSO at Minda, joins in to talk about how their numbers, though, have been. And it's been a good set, Sunil, for you. What factors and segments have contributed to the growth this time?
Hi, good morning. So, as usual, the sunrise businesses like the EV, sensors, controllers, lighting, alloy wheels, I think there are a lot of businesses who have contributed significantly to the last quarter growth of almost 17% year on year.
Okay. You're growing when the sector is not growing. Is that largely because of new products or market share gain?
There are multiple factors which are playing here. It could be market share gains. There is a lot of premiumization play which is at work, be it the LED lamps, be it the alloy wheels, be it the capacitive switches, etc. So there are multiple factors. It is not limited to one. Plus, also there is a aspect of adding more products, not only premiumization. So more products from the EV space, which we have been adding. We have been gaining significant market share there. We have been seeing significant growth there. If you see only, say, for example, EV two-wheeler segment perspective, last quarter we raised around 228 crore of revenue, which of the overall pie of our two-wheeler revenue is almost 13-14%, whereas the industry penetration is roughly around 7.5%. So from that perspective, there are a lot of businesses who have been contributing significantly well to our growth.
When you look into the second half of this year, auto companies are saying things are coming back. Is there a correlation which you are also likely to benefit from? Because if you are a supplier, the indications from OEM will come first to you. And if OEMs are giving us a better commitment or visibility for second half, will that apply to you as well, that second half will be better?
Well, absolutely. As we always say that 97% of our revenues is directly linked to the OEM revenue. So if industry grows, definitely it will have a clear impact on the players like all the tier one, tier two, etc. So that's definitely a positive sign. On top of it, as you would have seen in last many quarters or many years, we have been consistently working on multiple levers like the premiumization play or the kit value expansion or the new product addition. So all those aspects is what something we have been working on, and our strategy has been consistently how do we outperform the industry growth. So if industry grows by X, how do we at least consistently grow by more than 1.5x, not only quarter to quarter, year to year, but maybe from medium to long term perspective. And that is what our endeavor is. So if the OEM guidance, what we are hearing, if that works and if the numbers for H2 are better, definitely our idea is or our endeavor is to do better. If you see H1, the industry growth has been in terms of volume is roughly around 9%. Within that also two-wheeler segment we know has done much better than a PV segment. But our growth has been almost 17%, which is again a factor of the multiple levers which I just spoke about.
What is it then you think it's going to equate or translate when it comes to your EBITDA margins? You think 11% plus for FY25, is that what you're going to achieve?
Yeah, Aisha, you are right. So in fact, that has been our guidance at the beginning of the year, 11% plus minus 0.5%, with a tendency towards the upper end of the range. And we have been able to successfully operate with that margin for last few years now. Despite there are a lot of businesses which are at the startup phase, you know that we are in a significant growth phase. We have some of the plants who have started recently, and normally we expect the third, fourth year to achieve their normal profitability level. So they actually drag down your average profitability. From that perspective, this margin guidance is what we would like to achieve this year and maybe consolidate as we move forward. On top of it, we are currently working on almost 13 new expansion projects. So they will also come gradually on board in next 18 to 24 months, which is what we are working to see how we can maintain this margin.
Tell me, what is it that you're witnessing when it comes to EVs in the domestic market? How is demand and the entire, cohort of the supply chain dynamics panning out?
Well, demand definitely has been good, specifically on the three-wheeler and two-wheeler segment. Three-wheeler, as we all know, the penetration for EVs is already more than 50%. Two-wheeler from last quarter to this quarter, there is a clear 2.5% jump from 4.9% to roughly 7.2, 7.3% is the penetration for EV two-wheelers, and it's consistently growing. And last quarter actually has been the highest so far in terms of EV penetration to the total volume. So we remain fairly optimistic in terms of penetration of EVs in specifically EV for three-wheeler and two-wheeler segment, because there you don't have the challenges like range anxiety or things like that. So which is primarily limited to your city driving and don't need too much of charging infrastructure. So that's where we are very optimistic, and we have been front runners in building our product profile around the EV products for EV two-wheeler and three-wheeler specifically.
Is EV business a higher margin business, or it is at incubation stage? When you start, you will start low and then you'll increase margins?
No, you are right. It is initially lower margin and it's at the incubation stage, because what happens is you have to front end all the lot of capex. You have land, building, some of the plant and machinery which you can spread out. So from cost perspective, your fixed cost, your people cost, your administration cost, they're all fixed. So you are preparing for a much bigger volume in future. So definitely in short term, it is margin dilutive because your costs are there, but revenue is not there, which you have built the entire setup. So from that perspective, initially, yes, the margins are definitely lower, but as we move forward, as volumes grow, we do expect to achieve our average margins in next few years.
Right. The other thing I want to get a pulse from you right now, Sunil, is how the festive season has panned out, because there have been many auto companies and we're getting very varied and very different opinion about how the festive season sales have been. You perhaps will have a better handle.
I wish I had a better handle, honestly, Aisha. We all are part of the same system. While we do appreciate and understand that there have been much higher inventories before we went into the festive season, I think data is yet not there in terms of what is the real inventory levels today, but we presume they are much lower than what we were having before the start of the festive season. Because if we see the next month or two, the production volumes, they are fairly stable. We are not seeing any significant cut in the production volume. So that gives us that comfort and conviction that the season was good, and there is no significant further buildup of the inventory which has happened.
I look at the global setup for autos, whether it's BMW or Volkswagen, all of them are giving profit warning. How does that impact your future export pipeline? Because these are large companies who are talking about single-digit margin and single-digit growth now.
No, definitely it has actually impacted us as well, because if you see of our total revenues, our international come export revenues used to be around 13% of the total pie, which in the last quarter has been around 11%. So there is a clear linkage of what you said in terms of volume drop. Our exports have seen a significant impact in terms of volumes, and so is the revenue from our overseas operations, specifically in Europe. ASEAN has been fairly stable, but yes, Europe and Americas, the volumes have been lower, and that in turn has direct impact on profitability because exports tend to have a little better margin, and also the overseas operations, we all know that the costs are largely fixed and there are very limited levers you can try and reduce cost as the volumes go down. So from that perspective, yes, our overseas operations also have been experiencing tough times in terms of margins.
Okay, Sunil, so good chatting with you. Thank you for taking your time out and speaking with us today.
If you like this video, then like, share and subscribe to ET Now.